Good day. Ira Epstein of Linn & Associates with your metals market wrap-up for this Tuesday, the 22nd of September, the first day of fall, by the way, 2020 at 5:50 p.m. Central Time. So the gold down tonight early on, about $4, silver down almost 7 cents, copper hanging in this 306 area right now. The dollar was stronger again today at the expense of the euro and a number of other currencies. We had a reversal in the stock indices. Most were higher today. It's called a Tuesday reversal. You get a big down day on a Monday. Sometimes you get a reversal. But you had an up day in the NASDAQ and it didn't reverse down today. So you've got to look at what you're talking about there. The API numbers came out at 3:30 today for the energy, and they showed a net draw of about 7.5, 8 million barrels. Now, I'm including the products and oil itself. Oil by itself, though, had a small rise, about 500,000 barrels, 600,000. But the products saw millions taken off. As we look at the bonds and notes, very stable today. So as we go to the gold chart, we can see how the market's down $57 for the week, almost 3%. We're about midweek now, so with tonight's trade, you can see you're adding to that a little bit, and you can see where you're at. The one thing I'm going to keep pointing out is this market from the August time frame has still not come out of that trading range. And I know the temptations to say, it's going to break through it. Okay, maybe it will. We'll see. If it does, I can make an argument then for the mid-1800s. If the market holds here and starts back up over the 2000 level, well, why not go back up to the 2100 zone? So many battles are going to be fought right here. The trend in gold at this time is down. You have a pattern of lower highs, lower lows. So until you get up through this high, and that high right there is 1968.20, the market stays bearish, okay? At least in terms of the chart pattern of lower highs, lower lows. We're the key moving averages. The market is under the 18-day average, so the bias is down. I teach in my charting course that bias, be it a stock chart, be it a futures chart of anything, when the market's under a key moving average, such as the 18-day average, that is my focus for bias. It filters my swing line. So if a swing line is pointing down, but the market's over the 18-day average, the two fight each other and you don't get a trade signal. That's what at least I teach. So right now in this market, it's under it, which means to me, with the current pattern, rallies into the 1949.60 area are likely to encounter strong resistance. You'd have to get over that 1968.20 area to break the downtrend. In terms of support, you're on it. You see these black dashed lines? They're called Bollinger Bands. It's an algorithm designed to keep the market trading within them 95% of the time. Another way to look at it, though, is when you hit the band, that's often an area because of that algorithm, the traders build in the idea, hey, maybe we should take some money off the table. If you go up to it, same concept. Now, you have to tie this together with momentum. It's important because if you start riding the band and just leaning on it, you're looking to see, does the market get to a point where it embeds? Embed means you take the momentum index, and instead of most indexes getting overbought or oversold, it locks into a trend, be it downside or upside, a stiff lock-in. It takes both numbers under 20 to do a bearish one. You're nowhere near it, and momentum is pointing down. So I see a market that's in a downtrend. The bias is down. It's hit downside targets, and it's sort of stalling right now. In the gold-silver ratio, we had gone sideways for quite a period of time here at the 71.5 level. On the recent break in the metals, what we saw is the silver market lose more ground than the gold, and with that you can see the spike that you got. The higher you go in the price here, it means that you need more silver in a perfect world to get 1 ounce of gold. So you got your buggy that you stole from Whole Foods or wherever you shop, and you put your 90 or 77.98 ounces in it. You run down to a store, and in a perfect world, no commission, he'll give you 1 ounce of gold. That is what you look at in the gold-silver ratio. It also gives you an idea, is silver weaker or stronger than gold? And when you get into bull markets in metals, often silver outpaces the gold when the phase is ready to move to another up phase and loses to it in that correction phase. So that's where we're at. Like the gold market, you're just running this lower Bollinger Band in a downtrend that is oversold and not yet trying to convert and lock in that big downside. The copper market's giving you a very good story of finding support at the 18-day average of closes. At the same time, the market's had an opportunity to be slowly working itself out of being overbought. My definition of overbought is either number of the slow stochastic study being over 70 without being over 80 for both of them for several days in a row or more. So this fits into just being overbought. Markets working that off, and markets work it off by either embedding, and that would mean both numbers getting over 80 and going sideways for several days or more, and that'd be very powerful signal to the upside, or correcting, which means a price break back down to work that number off, and that seems to be what the market's doing. In the platinum market, it's probably time that we move away from the October platinum now and go to the other months. You're down into an area here where you've had a pretty stiff price break. You've just come down in this market from the 1,000 level all the way down to 854, 855. You're down to a zone where you got to be a bit cautious here. While you're under the 100-day average, you're also not moving far from it. So that's something to keep an eye on. December Palladium, today finally. This was yesterday, today hits the lower Bollinger Band. If you study the way that I teach charting, whenever you hit a Bollinger Band upside or downside, that's where I think the pros take money off the table. So today on a downtrend oversold, I think pros are very satisfied to take something off the table. Doesn't mean they have to do it, it's what I teach. In the dollar index, you are not trending. You're still very much in the sideways pattern here. You're trying to break out to the upside. In an overbought condition, will it be able to stay up? That's what we'll find out. Each time it's done this before this, it's failed at this level of 9,400. Now, if this market mounts this as a base and starts up, I tell you, there's a lot of traders that are wrong in the risk in this. The bet has been since the summer that the dollar would fade in the second part of the year as the COVID would allow Europe and other countries to do better. What's happened recently is the next wave of COVID has hit the European countries, and as it's hit those countries, the dollar's been getting a bid. I'm giving it to you in a simplistic form, but it's what the market is looking at right now. I believe that, and we'll see if the market can hold this or not. Very interesting. For the U.S., unfortunately, we had 200,000 deaths today, so we're not by ourselves. We're probably the most infected country out there with deaths, if you think of what's going on. You know, we talk here a lot about market research, and that's what I do with you. I start you off, if you're a subscriber of mine, in the morning subscriber video. I set you up with what's going on in Asia in the morning, what's happening in Europe, and then back to us with all the reports. We also do an element of that in the whole commodity complex. I know some of you might want me to cover lumber. There's not enough volume for it, but we cover it in these areas. So if you're interested in our special reports, our analysis of the markets, our commentaries, all you need to do is go to my website at www.iraepstein.com. Under the word free offers, you can sign up for our newsletters. They'll be coming out to you. There's a 2-week free trial to them. No credit card. We're not asking you for anything. See if it fits in with your style of trading and the analysis you're looking for. You can always call our staff. They'll get right back to you. I'm Ira. You have a great day. I will see you tomorrow.